Hello, everyone, and welcome to Richardson Capital Management's monthly economic and investment update. My name is Mark Steele, and I'm joined again by our Director of Investments, Dan Brown. So, Dan, stocks performed well in July and August, but in September we saw a little bit more volatility. Can you explain a little bit of that?
Sure. So we saw right after the Fed's mid-September meeting that interest rates rose pretty dramatically the last couple weeks of September. And we think those two things were directly tied together. So the Fed signaled at their meeting that they are now ready to begin tapering or reducing the amount of their monthly bond purchases. So just to review for a second, they've been purchasing about $120 billion worth of bonds every month, basically since last March, April, since the onset of the COVID pandemic. And now they've signaled that the economy is strong enough that they're willing to take or reduce the amount of bond purchases. And investors interpret this to mean that the Fed will formally announce at their November 3rd meeting that they will begin tapering or reducing their bond purchases in December. So it's natural that interest rates would rise on this, and just a longer term view on the Fed and interest rates, just because they're going to begin tapering their bond purchases relatively soon doesn't necessarily mean that they're going to begin to raise the level of Fed funds rates. So we think that probably is at least a year out from here, if not more. And again, interest rates still very, very low, very accommodative to the overall economy and the financial markets.
Dan, we've been hearing more and more stories about these huge container ships not being able to offload their cargo. How does this affect inflation?
Yeah, unfortunately, it's directly tied to inflation because it's been pushing up the transportation costs. And it's not just for ocean-bound cargo. So the chart we're showing is the cost of shipping a container from China into Los Angeles. It's also impacting things like trucking and rail. And a lot of it is just an acute shortage of labor. And unfortunately, we think it's going to take a while to iron this out. So we think inflation could remain elevated for the next couple quarters until all these supply chains get resolved. So Mark, another theme that we've been paying attention to here at Richardson is just the housing market and the economic tailwinds we think could come with that. Any comments you want to add to that?
Yeah, I mean, if you've been trying to buy or sell a house lately, you pretty much realize that prices are a lot higher than they used to be. We've got a chart here that shows it can be anywhere from 8 to 37% increase in the cost of a home. In Wisconsin alone, it's up 16%. So when supply starts to catch up to demand, we expect these prices to cool off. But for right now, the housing market is on quite a tear. So something to keep our eye on. So Dan, I mean, can you give us kind of wrap this up for us and give us your outlook for the fourth quarter?
Sure, Mark. So despite the recent volatility in the financial markets, we still remain optimistic looking out into the fourth quarter and even out to 2022. And a lot of that is just supported by the fact that we expect overall economic growth, or GDP, to remain elevated. It's going to come down from where it was this year in 2021, but it's still going to be above average. And corporate earnings growth should still be very strong. We're very impressed that corporations are able to pass on the higher levels of inflation without seeing a hit to their top line revenues. So it's still pretty optimistic. We think, however, on the fixed income side, could be some rough sledding as we anticipate interest rates will probably still rise further into next year. So we've been underweight traditional fixed income in our discretionary managed portfolios and attracted to some other different asset classes that have similar characteristics of low volatility but above average income.
Yeah. Good stuff. And we look forward to the fourth quarter. Thanks again for watching. If you have friends or family that would find interest in this, feel free to pass this along. And we'll be talking to you again soon. Thanks.